everybody, to all the watchers, the viewers, the listeners, to Money Management. Today, we're very excited to host Phil Atwan, a good friend of mine that's been in 1031 exchanges for decades now. Right, Phil?
Decades is right.
That's right. How long would you say you've been in this?
Well, I've been doing the 1031 exchanges for about 20 to 23 years now. Prior to that, my background was title insurance, going all the way back to 1982. So I've got a balance in the real estate industry in terms of how the transactions work and now what the federal government requires to do a 1031 tax deferred exchange.
We're very excited to have you, especially now with potential changes, with the 1031 regulations and whether 1031 is going to stay or go, right?
I mean, this is our 100th year. The 1031 exchange was initiated and launched by the U.S. Congress back in 1921. Here it is 100 years later, 2021. And it's been very strong and it's been doing well. It's had challenges where some, different presidents or Congresses wanted to eliminate it. We're facing that right now with the new incoming administration who wants to eliminate it. So we'll be marching and going into, into Congress. I've met with Congress in Capitol Hill before, talking to the various congressional leaders about the exchange, why it's so important to our economy, and how it continues to bring revenue to the economy and help investors to move their property around to generate more business.
Well, I'm glad you have all that information, and that's exactly the reason why we're so excited to host you, on our show. And I wanted to first find out, how did you and when did you discover you wanted to get involved in the finance world?
Well, investors, and I'm an investor, it's all about three things. Number one, I buy properties because I want income. I want it on a regular basis, every month. And the more doors I have, the more checks I get. So if I have one front door, whether it's a condo or single family that pays me rent, I can count on that check every month. If I have 4 front doors, I can count on that check once a week. If I have 30 front doors, Ben, I can now have a paycheck almost every single day. And that's what motivates us as investors to own property. So it will generate income and work for me so I don't have to. Number 2, I want the appreciation value of the investment. Some people put money in the stock market. It's fine. I believe in a balanced portfolio. But the bottom line is all it could do is go up or go down in value. Whereas investment property over time goes up and it pays me monthly income.
There you go.
And the third item is that it depreciates. I can actually utilize it for tax savings, that it actually reduces the amount of income taxes I pay on the rent I collect. And that's the beauty of having an investment property. And that's what drew me to this particular area of real estate called investment property 1031 tax deferred exchanges.
That's phenomenal. I mean, these are really, the basic, rules, ABCs of what makes an investor wealthy. You have to follow these steps and you have to utilize your 1031 exchanges as much as you can. Truly want to get to the wealthy stage. You mentioned some of the benefits of an investment property as far as appreciation and write-offs. What would you say is the most common regret that investors have?
That's an excellent question, Ben. I think the most common regret, and I've been doing this now for a lot of years, number one regret is they wish they had bought more when they had the opportunity to do so. I just don't see a lot of people saying, I bought too much property. I mean, they just wish they had more that's going to generate this kind of income. And the beauty of this thing is the 1031 exchange allows you to move those properties around to leverage the equity to create more growth in these particular areas of income, appreciation, and tax write-offs. So the number one regret I think investors have is that they didn't buy as much as they could have.
So if you were talking to your younger self, and I ask this all of my, guests, and this is always a very interesting question, what kind of a recommendation, advice would you give your younger self as you are in this field for a few decades now?
Don't spend all your money on things that are not going to give you a return of income.
Mhm.
I think, saving your money and then putting it into something that will grow and work for you over time, mainly property. I mean, think about it. Of all the people that probably are listening to your voice and mine today, how many of them that are financially successful have bought and owned investment property? I got to say the great majority of them have. Of all the people I know that are the most affluent, real estate play a very significant part in their portfolio. It's not necessarily buying the big house or buying the really nice car or always going on vacation or doing something. It's to create these types of investments that will produce income, so I can go and buy bigger homes, go on vacation, bigger cars. You need something that's going to generate income for you on a monthly basis.
Absolutely. Residual income is the name of the game. And at the end of the day, all you want to do is receive your checks. I wanted to find out, how can you re-leverage without paying capital gain taxes? And keep in mind that some of our listeners are college students. We have a lot of college students that are following the program that are in finance, that are looking to be young investors, and they might not know what capital gains is. So please help us out.
Well, capital gain, simply put, is not what a lot of people think. It has nothing to do with the amount of equity you have in the building. It's the sales price minus what they call the adjusted basis. The adjusted basis consists of what you paid for the property, any capital improvements that you put into the property, minus depreciation, minus add-in closing costs, and the CPA will then come up what they call as a capital gain. It doesn't matter if you refinance the property or not. The gain is the gain, the sales price minus the adjusted basis. And that's what you pay taxes on. Now, if you decide to pay taxes on that, you're going to pay anywhere today between 28 to about 45%. Unfortunately, with the new administration coming in, they have made it a real strong point that they're going to be raising that tax actually quite a bit. So the bottom line is that you could sell the property through something called a 1031 tax deferred exchange. It's simply that. It's not tax free, it's tax deferred. It allows you to take the basis of the property and the sales price of the property and to re-leverage it into bigger, better properties that maybe have more doors or maybe multiple properties. So those properties will produce more income for you and go up in value because now you have more, bigger, multiple properties that are going up in value. See, because if you have all your equity in one building, it's not going to produce any more income for you other than not having to pay a loan. Now think about that. If you diversify, you begin to create more doors, more front doors that will pay you rent on a monthly basis. And if you think about it, whether you have a paid-off property or a leveraged property, both of them will give you the same amount of rent if they're identical properties. So it's better to re-leverage it. And the equity will go up because now you have more properties and more doors that will go up in value. So your money starts working harder for you so you don't have to. So that's what I think is a way to go. Now, by selling, doing this tax deferred exchange, the government won't take your 28 to 45% tax out. Your CPA won't charge you that. You'll be able to defer it all as long as you buy other investment property that is of equal or greater value than what you sold for. And if you do that, you've deferred your tax, you've gotten into better property. Some investors are moving their properties from different, from here to different states, depending on what's out there and what's looking attractive these days. But it'll just let you to re-leverage, to adjust your portfolio. So like you said, you're doing the work, but really the property is doing the heavy lifting and creating the income.
And I've used exchanges throughout my career to be able to recapture the equity that I had and continuously receive my checks. So the takeaway really from what Phil is telling us is make sure that you are using all the tools that you have, to your disposal in order to maximize the checks that you're receiving.
Absolutely. You're absolutely right, Dan. I mean, and the sooner you learn this lesson, the wealthier you will be earlier. The goal is simply to make your properties work for you. And the later you start, you'll still get a benefit out of it. It'll just, the heavy lifting comes at the beginning, first 10 years. And then after that, boy, I got to tell you, everything starts shooting up. I can't believe prices of what property is today. They said 10 years ago, they said, oh, property will never go up again. The market crashed, values were down. Guess what investors did when the values went down? They bought. Why? Oh, because everybody saying everything is going to hell in a handbag. Well, guess what happened? They went up exponentially again. Investors want property here. They want to live here. They want their rentals here. And they're always looking for opportunities to make them grow.
Phil, would you tell us real quickly about the 1031 exchange process in which, pretty much as a client, as a young investor is thinking about doing a 1031, what's involved in it, something really short.
Sure. Ben, what happens is when it's time to re-leverage, they talk to somebody like you, get the property listed, get it on the market, and then bring in a third-party facilitator, because the IRS will not allow you to do a 1031 exchange without an accommodator, facilitator, a qualified intermediary, all kinds of different names we have. It's all the same thing.
Right.
We have to set up the exchange with the escrow company at least a week before escrow closes. I got a call just today from somebody who's very eager to do this, but her CPA forgot to tell her that if you don't have an accommodator, you can't do an exchange. And she closed escrow 3 weeks ago. She has to pay all the taxes. So it's too late. So you take us with you to escrow. Once the sale closes, the government says you have nearly 6 months. Technically, it's 180 days to close escrow on whatever you'd like to exchange into, whether it's one or multiple properties. Number two, the first 45 days of that 180 days, you can declare what you're going to buy via address. You can name up to 3 different properties under the 3 property rule, and you can buy 1 or 2 or all 3 properties, whichever you prefer. So obviously you're going to be working with somebody like Ben, who's going to be able to find those properties for you and get them in escrow for you. So you'll know what to name in that 45 days, and you'll know what you're going to close.
Awesome. And, just to piggyback on what you were saying with the lady that unfortunately didn't put her money with an accommodator, if she was to put her money with an accommodator, she would be able to do a reverse exchange, right?
A reverse exchange says that you're going to close a purchase first. That means you're minding your own business, or you're just looking at properties, and then something drops out of the sky and you find an incredible property and you want to get it before somebody else does, because it's manna from heaven. Right. So what happens is you want to take advantage of acquiring it first, which means you're going to have to float some money to be able to acquire that property first, close it through the accommodator, and then close your sale up to 180 days later. It's literally backwards. That's why we call it a reverse exchange. So you could take advantage of opportunity knocking on the door.
That's right. We're all investors, and we're all looking for opportunities to be able to save, where there's times to save, and obviously manage our money properly. Just like Phil said at the beginning of the show, don't just spend on everything. Focus on what it is you're going to spend on, so that way you have more of it to spend, and then you'll have bigger checks coming in your future.
And guess what? The future comes very quickly. Trust me on that. Yeah. And the bottom line is you're going to live a long life. So why not live all those years with properties that are producing income for you on a regular basis, as opposed to having to work to meet all your bills and obligations, and if you get a hiccup in your work, guess what happens? You don't meet all those bills and obligations. They start taking things away from you. So you definitely want the money to work for you, so you don't have to.
Absolutely, absolutely. And I wanted to remind our listeners again, that you're able to sell a rental property in California and buy one in Texas or vice versa. This can be done nationwide. This is federal.
Absolutely. There are so many opportunities in Idaho. So many investors have been buying up there. Just as an example, Nevada. I mean, if you in parts of northern Nevada, you know who's been building buildings up there and hiring employees? Amazon, Apple, Microsoft, just to name three. And what happens is they hire people who need housing. And guess whose house they're going to be renting, or their condos, or their units. That's another one. Another place that's very hot are parts of Arizona. Texas has continued, it will continue to be hot. We've seen other places like Florida, Tennessee. I'm telling you, folks, you can exchange anywhere in the country, and it's just a wonderful thing that you can keep moving it from one property to another. And if you're in residential today and you want to go to triple net lease where you have like a Walgreens or a Starbucks or a Trader Joe's as your tenant, you can trade a couple or three of them into one large building, a commercial building, and the government will let you do that via a tax deferred exchange. So you can move around your portfolio to meet your needs, whether you don't want to manage anymore, or whether you want to go into something that's a little more simplistic, or if you want to broaden your base. The government will let you do that via a 1031 exchange.
Well, Phil, you really covered it all. We started with the fact that it's never too early to invest. And we continued with the process of the 1031 exchange and what someone has to go through. And it's fairly easy, to be honest with you. Myself, like I said before, I've done a few of those, and it could be potentially stressful when you're looking for a property. But as long as you understand your main focus and what it is that you're looking for, you'll get there. And at the end of the day, this is money management. So if you really want to manage your money, you want to manage the equity that you have, and you don't want to give up that equity to the IRS. If you need to, we all pay taxes when we need to. But if there are tools for us to use, we should definitely use them. And please contact Phil. We're going to be sharing Phil's information, his email address and direct contact information. Very recommended for all your 1031 exchanges. Phil, was there any last words to our listeners?
Yeah, and it's something that we've already discussed, really. The biggest regret investors have is that they wish they had bought more.
Yeah.
I remember when properties were selling for $100,000, it was mere insanity. $100,000. The only opportunities have gone through us, and then they went up to 300,000. Everybody said, "Oh my gosh, the market's going to crash."
Right.
Guess what happened? It turned into 500,000. Well, now that same property that was selling for 100 is selling now for $750,000. My question is, do you want to manage your money, or do you want your money to manage you?
There you go.
I want to manage my money. I don't want it to manage me.
There you go.
And it gives you the freedom to give money away, to give to charitable organizations you want. It gives you the ability to take care of your family and to help them out and other people and friends that you know. It gives you the opportunity to do what you think is best. And I love that. And that's why it's so important to manage money as opposed to money managing me.
I want to thank you very much, Phil, for your time. And I want to remind everybody to be wise with your money, be wise with your choices, invest in real estate, and always think money management, financial freedom.